Recently such news came out from Europe which created shockwaves in the global economy. Europe's biggest and world's fourth largest economy, that is Germany, the bugle of recession has sounded. Recession is a situation when a decline is seen instead of growth in GDP, that is gross domestic product. Also, in that condition, an economy also faces situations like rising unemployment and declining demand. Negative growth of 0.3% was registered in Germany in the first quarter. That means Germany has officially entered the recession, but Germany is not the only country in the world. The recession is being seen here, but apart from this, there are many other countries which are likely to be covered by the recession soon. Apart from Germany, Ireland, Netherlands and Greece are the European economies where economic contraction has been reported in the first quarter. If we carefully look at an April 2023 report by Bloomberg which depicts the recession apprehensions for the year 2023 worldwide. According to this report, there are very high chances of recession in the major developed economies of the whole world this year. If you compare the world's largest economies with this chart, then we get a clear picture of the recession. World's largest economy USA 65%, second largest economy China 12.5%, third largest economy Japan 35% recession probability is, and fourth largest economy of the year. Already recession has started in Germany. Now you must be thinking that what has been said about India's economy in this report? And for us, that is probably the most important part of this report. Because while there is a possibility of recession in almost all the major countries of the world, on the other hand, the probability of recession in India is being told as zero. Not only this, recently the Indian economy also achieved a new milestone. India's Finance Minister Nirmala Sitharaman announced on June 12, 2023 that the Indian economy has touched the path of $3.75 trillion in 2023, which used to be around $2 trillion in 2014. Also, India's share in global GDP used to be 2.6% in 2014, which has increased to 3.5% in 2022. Nirmala Sitharaman also told that according to the current price, India's GDP was $3.7 trillion. That's more than the United States' $3.1 trillion, France's $2.9 trillion, Canada's $2 trillion, and Russia's $1.8 trillion. According to Moody's rating agency, in the second quarter of 2023 also, India will grow at the rate of about 6%. And if the Indian economy continues to grow at this rate, then soon India will surpass Germany and become the fourth largest economy in the world. Adding to his announcement, he also said that you are India in the global economy. But the question is, after all, such a country was being pushed into darkness by the British in 1947. How? Today, after 75 years, has he become the rising sun of the global economy? If India made such changes in its economy that it almost doubled in just a decade, in today's video we will try to find answers to these questions. Former Prime Minister of India Dr. Manmohan Singh had said that Indian infrastructure has to be modernized and expanded at a rate that is constant with the growth requirement. This statement of Dr. Manmohan Singh clearly shows that the economic trajectory of a country has gone up. Below it depends on the quality of the infrastructure of that country. But despite this, if we look at the time before a decade, the pace of India's infrastructure development was very slow. But in the last decade, tremendous investment has been made by the central government to develop modern infrastructure so that the country can be taken to new heights. According to the every 1 Indian rupee spent on infrastructure development has a multiplier effect of 1.2 to 1.5x on GDP. With this vision, the network of national highways has been added by more than 50,000 kilometers in the last decade alone. Till 2014 to 15, where there were total 97,830 km of national highways in India, in March 2023, national highways reached 45,155 kilometers. Not only this, the national highways were also linked with rural roads under Pradhan Mantri Gram Sadak Yojana, by which almost 199% coverage has been achieved, which has directly benefited our rural people. It now has a sufficient route to reach the products of its agriculture and allied activities to the urban market, or rather, it has access to urban markets. But the biggest boost to road infrastructure development has come from the secondary sector of the Indian economy. where better connectivity has reduced the average time taken for goods and raw materials as well as the per-kilometer transportation cost. The biggest benefit of which has been to millions of growing businesses in India. Like the road infrastructure, India's rail infrastructure has also been highly upgraded in the last decade, where I have only seen capacity expansion due to doubling and electrification of railway lines. In 2014 to 15, where 1,545 kilometers of railway tracks were laid in 1 year. In 2021 to 22 it's almost 221,907 kilometers of railway tracks were laid. Between 2006 and 2014, that is in 8 years, a total of 4,698 km of railway track was electrified. And in the next 9 years from 2014 to 2023, 37,011 km of railway tracks have been electrified, and it is expected that Indian Railways will soon achieve the achievement of electrifying 100% railway tracks. In order to make the railway universal, some important points have been connected with each other, which has provided additional benefits to the industrial and non-industrial activities here. Today the construction of a separate dedicated freight corridor is in full swing for quick transportation of goods. India's first high-speed rail bullet train project is being executed between Mumbai and Ahmedabad, and India's first regional rapid transit system is going to start soon between Delhi, Ghaziabad and Meerut. India's tourism sector has also benefited the most from the efforts of the government, which is able to attract domestic as well as international tourists due to better connectivity. In 2013, where the tourism sector's contribution to Indian GDP was $172 billion, it almost increased to $250 billion in 2018 due to better infrastructure and connectivity. Although it came in this trajectory after 2019 due to the lockdown, but the sector has again caught its pace due to the already available infrastructure. Like road and railways, India has worked to improve its aviation sector, modernize its port and boost inland waterways, which have given direct and indirect benefits to the Indian economy. For him, India was always known as a third world country. That is, such a country is developing, its economic status is low and economic potential is limited. When heavy industrial relation was being seen in almost all the countries of the world, India was not able to grow in the manufacturing sector even if it wanted to, because India was lacking in resources. That's why India did special science on service sector in its growth, and today it contributes more than 50% of India's GDP. But now, after establishing its dominance in the service sector, India is moving towards becoming a global manufacturing hub. Many like Make in India that tomorrow for local launched by central government. These make this intention even more clear. Under the Make in India initiative, special concessions are being given to multinational companies to set up manufacturing industries in India. Because of this, many foreign companies who want to reduce their supply chain's dependence on China are looking towards India, and it has some important reasons. The first reason is India's large consumer market. Today India has overtaken China to become the most populated country in the world. At the same time, a large population of India is shifting from lower class to middle class and from middle class to upper middle class. Due to which the demand for manufactured goods is increasing, and multinational companies have the opportunity to cater to this increasing demand. Want to grab it? The second reason is the political stability service. Companies working in the sector can change their location anytime by closing their offices, and they do not have to face any special financial stress. But this is not possible with manufacturing facilities, as setting up a manufacturing unit is very cost-intensive. That's why manufacturing best companies never want to set up their units in such a place where there is no investment cure. India has an upper hand in the matter because India is the most cured and politically stable country in its region. India's neighboring country Pakistan is battling terrorism. Bangladesh does not have a large consumer market available in India, and China is known for its oppressive regime. The third reason is India being a regional export hub. India has signed trade agreements with many countries, due to which India gets many benefits. That is, after setting up a manufacturing unit in India, companies can serve the market in all the surrounding countries. Apart from this, a major problem with the Indian manufacturing sector was the underdeveloped infrastructure. Due to this reason, the manufacturing cost in India increases a lot in comparison to China. But now India is working with tremendous intensity to solve this problem, and soon India's infrastructure will be at par with China's. However, it still has some time to go, as complex land acquisition processes and complex labor laws are still some of the problems India's manufacturing sector is dealing with. But it would not be wrong to say that India has a golden opportunity to become a global manufacturing hub, because India has young workforce, demand and policies are also being made to boost local population. Currently, India's manufacturing sector contributes 15 to 16% to the GDP, which is a major reason for India's tremendous economic progress in the next few years by the government. India's strong banking sector. You'll remember the global financial crisis of 2008, when the terminals born out of the Lehman Brothers investment bank collapse caused recession around the world. Something similar was also seen in 2023 when America's three major banks, Silicon Bank, Signature Bank, and First Republic Bank, collapsed. After the collapse of this bank, along with the global recession, there was a threat of recession over India as well. Due to the strong banking sector of these banks, no such threat fell on the Indian economy. In March 2023, RBI Governor Shaktikanta Das gave a statement that the Indian banking sector will remain stable despite the global turmoil in the banking sector. PM Modi also supported the statement of the RBI governor and said that the Indian banking sector is strong. In such a situation, there is a question that when the world's best economy, even the biggest banks of America, were collapsing, then how did India's banking sector and economy remain affected by the situation? Actually, the collapse of a bank also has a negative impact on the economy of a country. When that bank is DCB, that is domestic systemically important bank. A bank is considered DCB when its failure would disturb the entire financial system. That's why these banks are also called two-bit fails. In India, State Bank of India, ICICI and HDFC Bank are classified as domestic systemically important banks. And the collapse of these Indian banks, like American banks, is a bit difficult because the balance sheet structure of Indian domestic banks is slightly different in comparison to American banks. It occurs. A large portion of bank deposits in the US come from corporates. The major sustenance of bank deposits in India comes from household savings, which are not withdrawn in quantity. Usually the largest portion of these deposits is with public sector banks. And at the same time, strong private banks like ICICI, HDFC and Axis are also with government as well as regulators like SEBI and RBI to save banks from all kinds of difficulties. That's why most of the time the customers of these banks do not worry about their service, due to which there is a possibility of bulk from the bank, and this is the wonder of the strong reforms done in the banking sector of India. Today, bad loans or NPAs, that are non-performing assets, are doing a love show in the country. Where bad loans were 10.8% in 2018, they have come down to 4.9% in 2023. Along with this, Indian banks have also improved their capital position, which is clearly mentioned at the start. Along with this, an increasing trend has also been seen in the deposits of Indian banks. In the financial year 2016, the deposits were $1,149 billion, while in the financial year 2022, deposits from Indian Bank have touched the path of $2,100 billion. RBI has also played a big role in making India a strong banking sector, in which it has been ensured through its monetary policy. May India's economic progress continue on the right track. Globally, where many countries are facing the problem of high inflation, RBI in India kept the inflation limit on a daily basis by using monitor tools. Succeeded in maintaining the foreign reserve and keeping the value of the Indian rupee stable in the international market. Friends, where the world is facing problems like COVID-19 pandemic, rising inflation and Russia-Ukraine war, India has effectively handled all these situations and kept the economic activities on track. Because of this, even today investors want to invest their money in India. Because of this, there is a flow of investment in India. The company survey shows that global business leaders are highly interested in making additional and first-time investments in India. Now look at this chart published by Economic Times. So it tells that in 2011 to 12, the inflow of foreign direct investment inside India was $46.5 billion, which has increased to $83.5 billion in 2021 to 22, and many fold increases are going to be seen in it in the coming years. A report by the Confederation of Indian Industry states that in the next 5 years, India can attract foreign direct investment of $475 billion. That is, despite facing so many problems like geopolitical challenges, unemployment, high inflation and currency depreciation, India remains the most attractive destination for investors. According to a survey, India has become one of the top 3 global FDI destinations in the world, and around 80% of the global respondents are planning to invest in India. The initiative taken by the government is responsible for this steady flow of investment. These governments have made many such schemes and policies, which have helped in boosting India's foreign direct investment, especially in the fields of defense, manufacturing, real estate and research and development. The Government of India increased the FDI of the defense sector from 49 to 74 and allowed 100% FDI through the government route. The Government of India has also amended the Foreign Exchange Management Act, Sir Tun Rose, and the regulations, through which LIC means life insurance. FDI up to 20% has been allowed in operations. Along with this, the government is considering easing the FDI rules for countries that share borders with India. The Commerce and Industry Ministry launched Geographic Information System MAP Land Banks. In this land bank, all the information related to the infrastructure of the industry like connectivity, infrastructure, natural resources and train, plot level information on where we can, plots, line of activity and contact details will be made available at one place. The government is about to introduce 3 policies through the Space Activity Bill, so that the scope of FDI in the space sector in India can be cleared. In September 2021, the Union Cabinet announced that 49% FDI would be increased to 100% to boost the telecom sector. Initiatives like PM Gati Shakti, single window clearance are also likely to boost FDI. Not only this, in the recent past, the Indian government has simplified corporate tax, reduced labor losses and made it easier to set up business in India. This has made the Indian economy a preferred investment destination. You have to do business in some countries. How easy? To measure this, an index was launched in the World Bank which is called this of doing business. India has shown tremendous improvement in this business in a decade. In 2014, India was ranked 142 in this index, but in just 5 years, India has achieved 60 rank in 2019, showing an improvement of 79 positions. In order to have a better form in this of doing business, the government reduced 39,000 clients and decriminalized 3,400 legal provisions. In 2014, India 180 used to hold the 4th position on the parameter of construction permit, but in 2019, India 20 came down to the 7th position. This improvement was possible because the number of procedures and the time taken for construction permits were reduced. India held the 137 position in 2014 on the parameter of electricity. In May 2019, India moved to the 22nd rank. Now a business has to go through only 53 days time and 4 procedures for electricity connection. Not only this, the finance minister brought Jan Vishwa's bill so that 42 central LACs would adopt a unified filing processor, thereby avoiding repeated document submission at the central and state level and ensuring quicker processing. To further ease the process for business, permanent account number, PAN, tax deduction and collection account No. 10 and director identification number, DIN, has now been merged, and these corporation fees have been waived off for companies with capital above Rs 15 lakhs has been done. Due to all these government reforms, India has seen this improvement in the ranking of Ease of Doing Business Index, which has developed a healthy atmosphere for domestic and foreign businesses to run their economic activities in the country. However, despite all these positive things, some big challenges are ahead for India in the coming times. The first and biggest challenge before India is to improve the low per capita income. While calculating GDP, that is gross domestic product, the method of nominal GDP is adopted. In this, inflation in third is also added to GDP. Because of this, the higher the inflation in this country, the higher the GDP growth of that country is also visible. Therefore, nominal GDP does not show a clear picture of the economic growth of a country, but capital income can be a better indicator of economic growth. Usually, the capita income of developing countries is less. In 2014, India's per capita income was $1,560, but at the same time America's per capita income is from India 35 times and China's per capita was 5 times more than India. But in this chart you can see how from financial year 2012 to financial year 2023 India has almost tripled its per capita income. But despite this, India is still far behind in this race and it is big in India's economic progress. Like India has to be removed as soon as possible. The second challenge is that a large population of India is dependent on agriculture for employment. According to the data of 2022, agriculture contributes 18% of the Indian GDP, but 45% of the Indian population is employed in the agriculture sector. Almost half of India's population is employed in a sector that contributes so little to GDP, which in a way can be called wastage of human resources. If the agriculture sector is made technically advanced and the human resources involved in it are employed in some other industry, then there will be significant growth in the country's economy. The third challenge is the increasing pressure of the population. It has already become the most popular TED country in the world. And in India itself, following day threads are being seen with a high birth rate. For such a large population, arrangement administration has to fulfill basic requirements like food, close shelter, medicine, schooling, which puts additional burden on the country's economy. Unemployment and underemployment is also a major economic issue in India, and when these combined with overpopulation, our population becomes a weakness instead of a strength for us. That's why we are focusing more on the quality as well as the quantity of population. Apart from this, due to the deficiency of capital, the growth of the secondary and tertiary sector is also limited. Because of this, the problem of unemployment and underemployment has increased further. Along with all this, India will also face the challenge of inflation in the time to come. Because in any developing country there exists a certain amount of inflation rate which reflects economic growth. As cash flow will increase in the country and unemployment will decrease, there will be an increase in demand, and as a result inflation will also increase. To counter this rate of inflation, it is important to increase the supply, which will be a big challenge for the government. So there is no doubt that the Indian economy has shown remarkable progress in the last decade, and due to the government policies, the economy is expected to progress and improve in the time to come. But looking at the whole situation, India should also be prepared for the coming challenges so that the Indian economy can do better not only in normal terms but also in terms of its GDP. And our wealth should not be in the hands of top corporates but can be distributed to every household in India or to every individual. And with these hope, friends, we end today's video here. What is your opinion on this issue? Do tell in the comments section.